Good morning, gentlemen.
Oh,
Good
he snuck in
morning.
on us.
Snuck
Yeah.
in there, yeah.
How
Tim,
you?
how's it going?
We're chilly down here in Florida today. It's only going to get up to
Oh,
58,
jeez.
but then I looked at y'all's weather forecast and I feel so much better.
we're quite a ways from that. So, Tim, quick recap of 2014 for you. Good year in the market. I know you had a couple takeouts, a couple stocks that did some well for you. I'm sure you
Oh, wait.
probably have one or two losers in that portfolio, but I know you're just holding on and buying more.
Well, here's the deal. We had 10 bank takeovers all across the spectrum of portfolios last year. That spot part was perfect. The energy stocks, we were ridiculously early. We bought more of a couple. We're not buying more of. They could be financially stressed if prices stay down here. We'll hold them, but we're not going to add to them at this point until we see what happens with oil.
And could you just talk about what's the symbol in that Hercules? Is that H?
HERO, and that's one that we're going to hold. We're not adding. If we stay below 50 for an extended period of time, Hercules, Swift Energy, a few others, they have huge problems. Um, don't know that oil prices will stay down there that long. Not willing to make the bet either.
And just their cost of production is so high, or they're just leveraged, or
Well,
what's up with these companies?
little bit of leverage, but they're going to have to take rigs offline because it's just not going to be productive to have the rigs running at this point in time, and they're going to have a hard time leasing them out. So they're going to be cold stacking rigs, and that's expensive.
Okay, so let's just talk about this whole oil move here. I mean, have you ever seen oil decline like it has, let's say, over the past couple months? I mean, and really, what precipitated this? Is it just the oversupply, or
It's
what's
a combination of oversupply, and the Saudis, are protecting market share. They're going to hold the prices to a level that forces the U.S. and Russia to cut back production. Now, they've said they're willing to take this down as low as 40, but for the last almost 30 years, you've been able to do pretty well in oil by paying attention to what the OPEC oil ministers are saying they think prices should be. They're saying they're willing to take it to 40 for a while to cut production, but they think prices will be 60 to 65. So I think in the short term, that's going to be your settle out in oil, 60 to 65. And no, I've never seen it happen this fast. Had I thought it was even possible to happen this fast, I probably would have never bought Hercules. I didn't think we could get down to $50 in 3 months.
And how about some of the bigger integrated? I know you don't mess with the big stocks like Exxon Mobil or whatever, but they've seen. I mean, they had the initial decline with crude oil, but now they seem a little bit more resilient. Nowhere near those December lows, or those December lows got back near just below the October lows. What's the reason why big integrated company like Exxon Mobil is holding up?
No, remember they're also selling gasoline, at retail levels. They're going to benefit from refining, and quite frankly, right now I think there's just a lot of money coming in to buy it for the dividend.
Okay,
So you
there you
could see
go.
another leg down in those things again if oil continues to hold down at these levels. So
Okay. All right, let's move on to the banking sector. And you said that,
let's
yeah.
yes, let's. It's much more fun.
I'm sorry. We'll get the bad news out of the way first. And so the banks, 10 takeovers, of the regionals, and that's what you focus on. Do you expect that trend to continue, or you think things are going to slow down a little bit?
Oh no, it picks up. It accelerates from here. We had more deals worth more money in 2014 than we did in 2013. We'll have more worth more in 2015. You're going to see more parts of Dodd Frank and some of the other regulations take effect this year. The regulatory costs are just going to keep going higher for these smaller banks. And the economy is not really growing at a rate quick enough to stimulate really strong loan demand. So a lot of these guys, I don't want to use the word forced to sell. Let's say it makes sense for them to sell.
I
And then you've got a lot of regional banks, just a little bit larger banks, that really the only way they can grow is to buy a smaller competitor. So you've got a group of folks that need to sell and a group of folks that need to buy. And once they get together on price, there's just going to be a lot of money made here.
Any regions, any particular regions that you think might produce a little bit more of the the companies being taken over than another region?
Well, I can point at a couple, but I will say that I'm starting to notice that I've got a lot of Michigan banks in my portfolio.
Oh, really? All
Yes.
right.
I was just kind of going through, and I thought since it was so daggone cold up there, I'd find a couple local banks that you guys could maybe warm up with.
Okay,
But
great.
I've probably got at this point 5 or 6 Michigan banks in the portfolio. They're trading just extremely cheap. But let me give you two of them that I think are worth talking about because they have strong activist investors involved, and that
You like that?
yeah, I love that because deals tend to get done about 1/3 of the time, and the rest of the time they tend to make changes that are going to, just get dividends higher, get stock buybacks going, things that get the share price higher. So, first we have MBT Financial. That's right in Monroe, Michigan. That's not too terribly far from you guys. Um, just the same stories we're seeing in other hard hit regions of the country that were hit, really hard during the credit crisis. Credit's coming back. Conditions are getting better. They're disposing of non-performing assets. The stock's at 85% of tangible book value, and you've got like a murderer's row for a shareholder list here. Okay, you've got Castle Creek Partners, FJ Capital, Basswood Partners, and Patriot Financial, all known bank stock activists, have a significant presence in the stock. So I would absolutely not be shocked to walk into work one day and find out that this little stock had been sold to a larger regional bank.
Okay, Tim. I'm gonna give you one guess
Okay.
where I was born and raised.
I'm going to say Monroe, Michigan.
You got it. You got
Okay.
it.
Well,
Yup. Yup. And
you probably know half the board of directors of this bank then.
yeah, and this was one that I think this is probably one of the biggest positions that I've ever had in my portfolio, and I thought I was dead on it when this thing got under a buck
Yes, it
in
did.
2011, 2012, and I just kept on buying it and looking because the fundamentals of the bank, and I had such a large position that I scaled out along the way 2, 3, and I think I let the rest of my lot go at 4. And I was pretty happy about that. And I've been thinking about getting back into it. And they do have a strong activist group, and I always check on the price on it. So I'm gonna keep an eye on this one. I mean, the only thing is that, man, I mean, I think that bank started when when Custer wrote. General
Yeah,
Custer is from Monroe. Did you know that?
I
That
did, and I will tell you, we are seeing a lot of 150-year-old banks go out in the past couple years.
really?
Yeah, it's a little bit unusual, but executive and banker fatigue is a real issue right now. Okay, these guys are dealing with all these regulatory problems. You've got a board of directors often that's 65, 70 years, average in age. They're tired. They've had enough. The last 5 years have been horrible. It's going to be very difficult for them to grow their bank going forward to gain the asset size needed to handle the new regulatory costs. So the number being bandied about is about 3 billion in assets. So to a very large degree, even in some of these very old banks, they're saying to heck with it. We've got a decent offer. Let's us cash out at a good price. We're done.
Okay, all right. Wow, I'm gonna have to let my buddies know about this one. Because I have mentioned it to you on the show before, and you said you're not familiar with it. But good old Monroe, we'll have to follow that one for sure. How about any other banks in Michigan?
First Federal of Northern Michigan up in beautiful Alpena, Michigan.
Have you ever been up north Michigan?
No, no, I avoid places like that. They're cold.
No, Tim, you can come. You can go up there when it's not cold. You can come and visit us.
I've
And
I've heard it's beautiful up there.
are you a golfer?
No,
Okay. Are
absolutely
you a
not.
hunter?
No,
A fisherman?
occasionally if there's
Okay.
enough beer.
Okay, all right. Well, if you're back in town here, and it's during one of these summer months, I'm gonna take you up to Harbor Springs or Petoskey, or maybe
Sounds
sneak
good.
up in the UP. But beautiful, beautiful, beautiful up there. Okay, what's the symbol on the Federal Bank? First Federal, you
F
said?
F F F N M. This is one of my bigger banks, as you'll see.
Okay. Oh wow. Okay. What's the story on this one?
Just nice little bank, 70% of tangible book value. You've got Joseph Stillwell is in there, a name we haven't heard in literally years since he blew up back around 2004. Jeffrey Gendell, formerly of Tontine Partners. Don't know if you remember him. He was the red hot hedge fund hand for quite a while there, putting up big numbers at Tontine Partners, and then he blew it all up. Now he seems to be creeping back, and he's starting to show up in a lot of these small banks. He was a smart guy who got caught on the bad side, I believe, of the 2008 market. So he seems to be back in banks. And then Joseph Stillwell, I mean, I think he's forced more takeovers than anybody else out there in the small bank space. And he's got a nice stake in First Federal in Northern Michigan. So nice little bank, trading less than 70% of tangible book value. Done a nice job of cleaning up the loan portfolio. Um, this is one of those ones that has an outside shot of being a dominant local bank that's able to grow earnings, dividends, buy back stock at a rate that keeps the activists happy. But at this price, it's priced for sale.
Tim, what about Bank of California? You talked about that one a little while ago. I actually
Yes.
did bias some of that because, and it hasn't really gone anywhere. It went up a little bit, it's pulled back a little bit. I mean, it's just a quiet, just kind of hanging out, but it is paying a nice little dividend too. You still like that one?
Still like that one. They're digesting the branch buy from Banco Popular that really increased the size of their asset base and their branch network. I expect if they don't get bought, I think they'll have a very solid 2015 earnings and dividend wise, as that part of California continues to recover rather nicely.
So you
Uh,
still like it here?
yeah.
I still like it here. If I did not own it, I would be a buyer at this price.
Tim, can we move away from the banks just a little bit? I mean, no, I want to stay on the banks, but I want to talk interest rates. And you talked a little bit about loan demand and that it's really not there. We did our Fed forecast 2015 last Friday. We had Peter Schiff and Ron Asana going at it on interest rates, and then you get the news overnight. One of the Fed officials, says, no hurry to raise rates. I mean, what could you just give us your outlook for interest rates in 2015?
Oh, on the caveat that you're crazy if you trade on it. Um, I don't think much happens with interest rates. The economy doesn't look like it's rolling along here, folks, to the point where the Fed can really do anything dramatic with interest rates. I think they put themselves in a corner where later in the year they're going to have to do a token raise of 5 basis points or 10 basis points because they've talked it to death. And they may not even do that if we get geopolitical disruption at some point during the year, because they have nothing left in the kitty if we get a serious geopolitical or economic problem. So, not much happens here with interest rates. It's not going to be dramatic. The Fed's kind of in a box. They have to move very, very slow here, and they know it.
And what about QE overseas? I mean, Draghi seems to have that in his repertoire, and I mean, I'm sure.
He has it in his repertoire, but he didn't do anything with it. If he doesn't take drastic action at the meeting on the 22nd, there's going to be problems in Europe. There's no growth to speak of. The unemployment rates are horrible, and they've got so many problems, and he's really dragging his feet. I read last night that the ECB balance sheet is actually 10% smaller right now than it was this time last year. He needs to get busy, or the markets are going to kick him out.
Okay, and what about you think he's going to do something ahead of that Greece vote on the 29th?
He'll do something on the 22nd.
Okay, good, bad,
I,
or
I don't. I think he has to. The markets are telling him he has to.
okay, Tim, and you have a webinar coming up.
I do tonight, and we're going to talk about all this crazy stuff for 2015 and kind of what we see happening and where we see value, and it should be fun.
Okay, all right. Tim Melvin of the Deep Value Investor Letter. He is our go-to guy on Benzinga's pre-market prep. Comes on, gives us his analysis of the energy sector as well as the banking sector, the small regional banks. Tim, thank you for your outlook, and we hope to talk to you again soon.
All right, guys. Have a great morning and a great week. We'll talk to you guys soon.
Okay,
Thanks, Tim.
thanks
Bye-bye.
for coming on.